Hi guys, this is Mark Shawzin, the pattern trader here, and for the past 11 weeks the US dollar index has been trapped in a mind-numbing trading range, probably one of the narrowest trading ranges we've seen in many years. Also, if you look at the dollar versus XAU or XAU USD, which is spot gold, we've been trapped in a similar mind-numbing trading range with the XAU USD trading between essentially 1320 and 1350 for 3 straight months now. So 11 straight weeks of very sideways trade activity. So as traders, we know that these times can be very difficult, and this is where we can give back most or all of our money as we try and trade through these environments which effectively are untradeable. So most people will try and resort to short-term trading. Try to trade these ranges back and forth, try and extract 10 or 15 or 20 pips within this very tight trading range. And frankly, that to me is just going to be a losing exercise over the long term. Effectively, you're just fighting with your broker who's taking 2 or 3 pips on every one of your trades. And eventually your broker is going to win that kind of battle where you go back and forth trying to trade these trading ranges. So what in effect is really the answer? And the answer really to me is actually you've got to peel back and look at the longer term. I think most FX traders get trapped into this thinking that because it's leveraged, because the moves are so volatile, that we need to be in and out very quickly. We need to kind of sit on top of our trading screen and get in and out of trades very quickly. And again, I think the statistics will show you that that's just a losing game. This is what most people are doing, and it's not my opinion, but it is a losing game supported by the statistics, which show that over 90%, I think it's probably 95, probably 99% of people are losing their money in the markets following these very short-term strategies. So what then is the antidote? Well, I kind of peel back and take a look at the long-term picture. I look at the monthly and the weekly charts and find patterns that I know give me guidance as to the future direction. So notwithstanding if markets get trapped in a 1 month, 2 months, 3 months trading range, I know with these patterns in my rearview mirror where the ultimate direction of a market will break. And specifically, I've been talking for the last 12 months or so about the British pound, the GBP correlated trading pairs, and how they've all put on substantial, meaningful bottoming trading patterns. In 2016, I was alerting my members around the world to a turn from a major downtrend to a reversal and eventually an uptrend in the pound versus New Zealand dollar. We saw that the pound versus New Zealand dollar put on very substantial double bottom in October 2016 and about February 2017 timeframe at about the 167 to 170 price area. Now that contract is trading at about 194, about 3,000 pips higher than that double bottom. But by virtue of the double bottom, we know where the direction of that pair is ultimately headed. So notwithstanding the fact that pound New Zealand's been trapped in a 4-8 week trading range, I know eventually it's going to break out to the upside. Same with pound versus Australian dollar. Pound versus Australian dollar is now sitting at a 2-year high above 184. And again, we have a triple bottom price pattern in pound versus Australian dollar. So with the word bottom in the pattern, we know that this pair is only going to head higher over time. Now, nothing goes up in a straight line. The markets will, retrace. The markets will go sideways. But we know by virtue of the meaningful pattern underneath these pound pairs what the ultimate direction is going to be. So what I tend to do is take smaller positions for the longer term and actually look to buy more, accumulate more positions on pullbacks. I did a meaningful analysis in my weekly video report. I'm going to include a link with this video on the pound pairs. But this is how I approach trading range markets, markets that aren't going anywhere, markets that are frustrating us, markets that are taking away a lot of our money. I look to position trade, trades that I know have patterns again, in my rear view mirror that are going to give me guidance as to the ultimate future direction. And then I just sit and exercise vigilance, patience, and discipline while these pairs just go higher over time. And that's the key phrase, over time. So it could take weeks, it could take months, it could take years, but you have to ask yourself, where do you want your account to be 9 months from now, 12 months from now, 18 months from now? I think these are questions that a lot of traders don't sit down with. You have to understand what your objectives are. So if your objective is just to fill your time, have a lot of distraction, have a lot of fun, have a lot of trading action, then by all means have at it. But if you want to grow your account, then you have to look at a different approach. So with that said, I'll see you next time, and I wish you a healthy and prosperous trading day. Take care.